You're welcome to our session today. So let's use some few minutes to review some of the setups we looked at yesterday. So the one that is currently on the screen is GBP GBP USD. Our expectation was that it should give us this pullback. And, so far, I think we used that during the early part of the day. It was doing as if it will continue in that bullish move. But of course, like I said, the general setup is bullish, but normally the way the market delivers price, market the way the market delivers price is that when it makes an impulsive move, when we have a move like this where we don't have any significant just price in one direction, we expect that even if it is going to go higher, that as a way of confirming that higher movement, we need to get a pullback. So it's that pullback that is rejected. That's what we are going to see first before eventually it will go to the upside. So the same thing with and of course, what was actually giving us that so much confidence was one, the economic calendar for the week. So based on what the dollar was doing, we also projected that wanted to see the dollar at least give us a pullback based on this impulsive move. At the early part of the day, was it's actually coming down, but then we know that pullback needed to come, and then gradually you can see that actually happening. And Sunday is excited because he got me. He actually requested that I should look at this Chef JPY for him, and during that, so our projection was that one, we saw that has already given us all indication that it wants to actually sell off. But then this was the move that happened, as that when we were looking at the market yesterday, we said we needed to give us a kind of a pullback, and that happened early this morning at around 8 o'clock. We got that pullback, and look at what happened. So if Sunday took that trade, and I projected that it was going to attack the liquidities below these old lows, that was going to take out this and then eventually take out this one also. So far from the place it started dropping, it has dropped more than 138 pips. So if you normally when we see big moves like that, especially the ones that come from the higher time frame, if we see them and we're able to maybe hold, even if we don't hold entire, because it is always good when the market is presenting you or giving you money like this, that you want to take it. You want to take out something. So if you are left knowing that this is where we are actually targeting, that our target levels are below here, below this point. So we still have a small portion of your trade that will still be running while you have actually broken even. So gradually, we're seeing that the market is coming to attack those. The fact that it has come this close, so cleared out the liquidity that is here. So we know that the next point that it will want to target will be this point here, will be the liquidity line below these old lows. So that's what Chef JPY is doing. Then Euro USD, same thing, just like GU, just like the GBP USD. Expectation was that it should give us a pullback. Should give us that pullback to that. So we are expecting it to come as low as this point here. That's when we can actually, because if we're looking at okay, how far is it supposed to come? So currently we can say it has retraced below the 50. It's currently at the 38 cement level based on this impulse, this move, this last move here. We expect it to come lower, go below the 50. So the moment it begins to enter these areas, the moment it begins to come into these areas, it will become okay. So these are levels, these are good levels. So when you identify an impulsive move like this, an impulsive move is actually is a move that aggressively goes in one direction. You identify a move like this. This is what we call impulsive, or you can also call it expansion. This is an expansion. The market goes in one direction. If we are looking at this, we see that we have more green candles just going straight to one direction. So normally, after that happens, we expect the market to a kind of to cool off. The reason why it will cool off is that some of the people who participated in this buy, who bought this market, a lot of them they are actually in profit. So they will want to take profit and all of that. So in course of as they are either reducing their positions or going out of the market, then there will be a kind of a temporary transfer of power where we will have less buyers and then more of giving the sellers opportunity to put down the market. But generally, that's how the market moves. The market moves when we have an impulsive move, we'll have a retracement and then a continuation. So the market does not go up forever. In fact, if this retracement, the retracement is actually the confirmation that that the market is going to continue in that original direction. So the fact that we have identified an impulsive move here. So even if we have been able to identify some levels on the higher time frame where we are expecting price to get to, the fact that before price will not just go straight ahead that level. No, it will still move the way the way the market delivers price, which is impulsive, correction, and then continuation. So at this level now, okay, it is still not a good level for us to actually jump into the buy. We still want the market to come lower. When it comes lower, it gives us more favorable points to want to participate. We also looked at let's see what NZD USD looked at that. So same thing. So same thing also. All the major peers were actually doing the same thing. We still expect. So we are still looking at because we did not get any significant pullback. So we are seeing the whole of this as an impulsive move. The good thing is that within the early hours, just like Euro USD and the GBP USD were doing. The market was buying. It was buying. So at that point, there's no need of panicking. You just need to know the way that this is how the market is supposed to deliver price. So if you do not understand the way the market moves, the point maybe when you woke up this morning, we've already had our projection that we need a pullback. We need a pullback because that's how it is supposed to move. So if you had woken up this morning and you don't really understand market delivery, you might want to start panicking and then want to feeling as if you are going to miss the move. And then imagine if you had participated in this when you woke up this morning and saw the market buying, you rushed in and then started buying. And you, depending on where you enter, you might just see a little profit before you know the market start doing that thing the thing we expected it to do. So already this last structural level has been broken. We might just see maybe a little pull back to the upside and then drop. Because again, if we are looking at this entire move, so we can look at it. We see that we've not had. Still, we have not gotten any significant retracement. Okay, so based on that, we're focusing on this, looking at this as a move. So we just naturally expect that it should give us a pullback. So that's what we are expecting, so that we can now fully gain a very good position, because it is not just about getting entry. You want to get entry at a point that makes logical sense, a point where you can actually place your stop loss at a position where the market is not gyrating. Now, if for example, like I earlier mentioned, that you woke up this morning, yesterday evening, our projection based on the way the market has so far performed, our projection was that we want to get we should have a pullback. That pullback would not give us now imagine if you had out of panic because of not knowing the way the market actually delivers, right? If you are woken up this morning and you saw this market, you saw it buying, and you have participated in the buy, where are you most likely going to put your stop loss? Where will your stop loss be? Is a question. Where are you most likely to put your stop loss? If you had fear of missing out, very likely your stop loss would have been around this region, and you see that it would have just been taken out. So that's why you want to, when you're entering, you want to enter at a point that makes sense, whereby your your stop loss will, you put your stop loss at a logical level, at a level whereby when your stop loss is hit, when your stop loss is taken out, you know that you were wrong. What you were expecting did not happen. Not at a point where the market will be gyrating. So that's why one of the elementary things, yeah, is elementary that you need to understand fully is price delivery, the way the market delivers price. And the way the market delivers price is this impulsive move, get a pullback. The pullback needs to be something like this, cannot be considered a pullback. Something like this cannot be seen as a pullback. It is too small. This is part of the move. This is a part of the original move. This too is not a pullback. It will also be considered as part of the move. So for a pullback, it needs to be significant. It needs to be it needs to move at least 50%. It needs to go at least 50% of the original move. Original move in that if we have this as we're having this now as one move, before we consider it as a pullback, it should give back at least 50%. So 50% is not really, it's not the ultimate. Okay, when it gets to 50%, maybe that's you can rush in and start placing positions. No, the 50% level is like the minimum requirement. Let it be like this is like the minimum requirement. But areas where we actually want to begin to which areas just give me a sec. Let me connect my system to lights so that okay. So like I was saying, we want the pullback to be significant, such that the minimum should be 50. But 50 is not the sweet spot. The sweet spot actually is when the market traces or pulls back into the 61 retracement level and below. Those are 2 points we can begin to look at entering the continuation of whatever move that we have identified. So you can see that trading is highly, highly technical. An example was this. If we were looking at this as a move, the whole of this as an impulsive move. So we've gotten almost one of the confirmation is that this thing has actually broken structure and all of that. So at what point could we have started looking for entry? We look at this. So you see the way the market retraced. It got to the 50 here. So if we were in a hurry, to actually buy, if we were in a hurry at the 50, this is the 50. If we were in a hurry, you see that the market just went a little, except you are the scalper. The scalper type, it actually gave about 53 pips or so. So there are a lot of persons that when they get 53 pips, they are satisfied. But if I take this trade, the first point I will be looking at taking profit will be this high. I wanted to go back to this high. So at this point, I would have still been holding this trade, hoping that you should go and take out this last high. But that really, yeah. But that didn't So you can see we didn't get so we didn't get up to that. We didn't get up to that, then it dropped. You see that? See the way it dropped. So if you at this point here, if you had entered at this level here, you see that your stop loss, of course, especially those of us who have a mental stop losses. Just give me a sec. Mr. Sunday, please, can you mute yourself, please, so that your background does not stop the class. Thank you. Mr. Sunday, please mute your mic. Okay, thank you. All right. So so if you had gotten an entry early at the 50 and it would have been 50 pips in profit. So unless you are satisfied with that, me personally, it will be as if I've not done anything, because I will be looking at the market going to pick out this last high. But that didn't happen. So where will your stop loss likely be? Those of us who go with some who go with mental stop losses of okay, maybe 10 pips, 20 pips stop loss. At this point, you would have been taken out. But then if you understand market delivery, the way the market delivers price, and you were even when it got to the 50, you said no, that's not all you need. That you actually need more. That you actually need more. You would have I don't know how these lines entered my screen. Trying to take them off. Okay, maybe I'll just do that later. All right. So, well, if you had understood the market delivery, you would have waited until when the market goes below the 50 levels and then see your move. So one good thing is, if you're patient and you follow market delivery this way, you put your stop loss at a point that is logical at some point. So as a new trader, so let's execute this trade like as if you are a new trader. You're not really grounded that much, but you were able to identify an impulsive move like this, and waited for the retracement, and then price entered your 61.8 retracement of your flip. So, and you want to participate on the buy. As a new trader, it's not bad if you go with this kind of stop loss. Just return your stop loss down to the last. Put your stop loss here. Stop loss is not much. It's just 45 pips. Because as someone that is just coming on, you shouldn't be aiming too high. So this is so by the time price returns back to this your high here, This is a risk to reward ratio of 1.7, which is good, which is very, very good for someone that is starting off. Aiming for a risk reward of 1.5 is okay, but there you're having 1.7. So your stop loss here, your entry at this point. So, but if you now hold it down to what is originally supposed to be the first take profit, you have a risk reward of 2.43, which is also very, very impressive. Okay, so this is how to start your analysis. So another pair that we looked at was USD card. USD card. This was the projection. This was what we projected. Actually mentioned that because the market was here on Friday, was there. I said I wanted the market to come and actually clear out marginally, what was all the liquidity below here and here was actually cleared with this move. It was marginally cleared here. But I was looking at so that there is nothing brings us down. Because as long as there is liquidity or money, so there is that tendency that the market will want to come back and clear it. But then, based on what it has done thus far, I'm still not convinced. I'm still not very much, although it has broken this channel that we also identified that yesterday. It has broken it. But I'm still not satisfied into rushing to buy this, especially with the fact that we are expecting somehow a weaker dollar. So if the major pairs that are paired with the USD are actually, we're expecting them to be bullish within the week and with the high impact news that are actually coming up. So I do not see where the dollar will actually have as much strength. That will also to some extent depend on what happens with the Canadian dollar. But thus far, not impressed. Right? Not I would have loved a situation where USD CAD actually cleared out not just the liquidity here, but the one below here. In that case, we will now know that there is nothing that will want to attract it to come to the downside. And of course, if we're also looking at it structurally, it hasn't broken structure. Structure has not been broken because a break of trend line does not mean a break of structure. Okay, a break of trend line does not mean the break of structure. So the market can actually break a trend line that just like it has done here without breaking the structure. All right. So based on that, we still want more. We still do more. But generally, I will not want to within this week. I will not want to participate in any buy for US. Okay. So guys, this meeting is going to actually time out in about in less than 2 minutes. So when it does, just rejoin with the same link. I don't know if that's clear. Is that clear? Just rejoin with it. It will time you out, but rejoin with the same link. All right. That's fine. so that we can spend more time discussing these beautiful markets. Okay, so that's for car. Thus far, a lot of persons may, the moment you see that this trend line has been broken, a lot of persons might begin to feel that it is time to begin to buy. But no, that's where the break of trend line does not mean the break of structure, because we could still see this market do this and still come back for the liquidity that are lying below this point. So it would have been better that it took its time. If if the strength that was used to participate in this buy here was actually used in dragging the market down to the point that it cleared out whatever that is lying below here, then we can confidently begin to look for a buy. But for that, so we